I'm Peter Meany from First Sentier Investors. I head up the listed infrastructure team. We've been managing listed infrastructure since 2007, which has seen us, navigate a few market cycles and certainly, a lot of risk and a lot of return opportunities. Today, I'd like to talk about three things that I think help people understand why now would be a good time to invest in listed infrastructure and why we think it can work for your portfolio over the next decade. I'm going to talk about the recovery in transport infrastructure, and talk about the growth in renewables, and also what's going on in digital infrastructure and the convergence we're seeing there. So firstly, on the transport recovery, it's quite clear wherever you look around the world, whether it's New York or Sydney or Paris, what we're seeing is a strong recovery as lockdowns ease coming out of COVID. And that recovery is being felt very much in private infrastructure. So we're seeing a shift in market share from public transport, from subways and buses, towards private vehicles. And this makes sense as people want a social distance, we're seeing car traffic now up above 100% of the 2019 levels. That recovery is also coming through in the airport space. At the moment, there's a pent-up demand for leisure travel, for visiting friends and relatives. And those airports that are focused on those areas, Mexico, Spain, have seen the strongest recovery in the airport space. We think that recovery will continue into 2022 and beyond. Looking out further, one of the things we observe, particularly in the US, is gasoline taxes have been a historic source of funding for transport infrastructure. Clearly, as we move towards electric vehicles, that's no longer going to work. So we're going to need, distance-based tolling systems, express lanes, and I think the Biden infrastructure plan, ramping up support for public-private partnerships, will see the next decade more of that activity take place. Secondly, in the renewables area, there's no doubt that the shift from coal and in the future gas towards more wind and solar, and the battery storage and transmission to support that decarbonisation of the power grid is a strong driver of growth in the utilities sector. What we've seen with the Biden plan in the US and also Green New Deal in Europe is extra support being provided through tax credits and subsidies for the continued rollout of renewable energy. We think that that's an immediate lift in activity, and then going the next decade, we think the tax credit extension for the next 10 years will underwrite the returns from that activity going forward. Looking out further, the hard to abate sectors, think of steel manufacturing, cement manufacturing. We need to replace some of the inputs to those processes, and we think hydrogen will play a very important role. There's only testing and pilot programs at this stage, but as we look out 10, 15 years, that will be a key opportunity for further infrastructure investment. The third theme is around digital convergence. What we're seeing as we move towards 5G is that use of data is becoming more mobile. People want to use their iPhones on the go. And everything that they're using in relation to the iPhone is in the cloud. So more mobility, more cloud computing means we need more towers and more data centers. And we're seeing that need for investment in the infrastructure again lift the growth rates. And we think that that is not just something happening now, but as we roll out 5G for the next 5, 10, 15 years, we'll need further and further investment into that technology. And as we're seeing with all of this, none of these outcomes happen. Decarbonisation towards net zero, more capacity in express lanes, more mobility in communication. None of that exciting technology outcomes happen unless there's the infrastructure there underwriting it. We think valuations right now are also compelling. And while we've seen a strong run in equity markets, listed infrastructure as a more defensive equity, does have more upside, we think, than the broader market. So if you're happy with how your portfolio's gone, you're looking at an alternative type of investment, maybe consider listed infrastructure.